What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we continue to see more consolidation as the NASDAQ 100 QQQs enters the full bull trend. Are we starting a brand new bull market? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.17% as we continue to consolidate between this critical support and this critical resistance, and we are still above our support trend line and we're getting very close to having the full bull trend. Now keep in mind when I get to the QQQs analysis, we do have the full bull trend, so we are seeing the tech sector lead the way higher, and this is very much so very early behavior of a bull market. So I know a lot of people don't think a bull market is possible, but I'm telling you the charts are saying otherwise, and it does look like we are preparing to head into a bull market. That doesn't mean we're going up in a straight line forever, but we are definitely getting very bullish market structure, which is going to open the door for buying the dip off of critical support because there will be a very strong foundational trend below the price action. Remember, I always tell you trade in the direction of the trend, and we still have a very strong bull trend, and we are getting very close to some major bullish breakouts. And it's going to be very important to watch the weekly technical analysis from the weekend because we had some major bullish breakouts on weekly charts. So I feel like every week that goes by, I continue to tell you more things are looking bullish, and that is not a coincidence. More things are looking bullish because we are getting more bullish charts, so do not completely ignore price action because price action is king. So for that reason, SPY is very simple right now. You are staying bullish as long as we're above SPY 408. Or you can use SPY 409, which is the support trend line. But either way, as long as we are above this support, we are still in a very strong bull trend. And the strong resistance is just above at SPY 416. Whichever level breaks first is going to tell you the next leg in the market. If we break below 408, we're coming back down to 399. And if we break 416, we're going to battle the bear up there at 421 and possibly even go into the 430s. It is that simple, so do not overcomplicate it. And you can see volume is starting to return to the market. And do keep in mind, bulls do not need volume to go higher. If there is no high volume selling, the market will go into melt up mode, which means you're going to see price going up on low volume. So do not think low volume is bearish. There is no such thing as low volume bearish. Low volume is always going to favor the bulls and also favor the trend. And right now we do have a bull trend. So the only thing bearish is losing support at SPY 408 and high volume selling, and so far we see none of that. On the NASDAQ 100 QQQs, we got the full bull trend today with the 20 simple moving average crossing back over the 50 EMA. Even though we were down 0.82%, we are really just cooling down after going to battle the bear at QQQ's 324. So 324 remains a very critical resistance, and that is the only resistance level I want you paying attention to, because unless we break above that level, we could continue to pull back because the bear is sitting right at that level. So there is no surprise we're struggling to break above that level, and when we do start getting consecutive closes above QQQ's 324, I am going to think the bear market is over. That is an extremely critical resistance that I believe defines this bear market, so closing above that level will very likely tell us the bear market is over and we are starting another bull market, which will mean SPY is going to go higher as well. Now, if we don't break 324, it is possible we come back down to some critical support at 314 or possibly even 307. But do keep in mind, with the bull trend, there are going to be bulls buying the dip. You could see the volume did pick up a little bit today, but we are seeing a very stable price action above the 5 EMA with a very strong bull trend. So there will be many bulls out there buying the dip, and it is very unlikely this is going to be a bull trap now that we have the bull trend. So watch that bullish breakout above 324, and you want to stay on the bull as long as we're above 314. On the Dow Jones, we were up 0.19%, and you can see the Dow Jones is in a consolidation wedge, building somewhat of a bull flag, getting ready to break out. And the breakout in the Dow Jones will be the breakout above 329 with the very critical resistance above at 333, and you want to stay bullish as long as we're above 324. The Dow Jones and the S&P 500 do not yet have the full bull trend, but they're getting very close to having it, and that is why I tell you the tech sector is leading the way, and you always want to see the tech sector leading the way in a bull market. The stock market is not going anywhere without the tech sector, so the tech sector looking the strongest is going to be a very bullish indication. On the Russell 2000 IWM ETF, we were up 0.77%, and IWM did test that critical resistance at 191, and it will start entering short squeeze territory if it starts closing above that resistance, which could take IWM all the way back up to $200. You can see IWM is going to have the full bull trend as soon as Monday, so the small caps and the tech sector are looking the strongest, with being the first indices to enter the full bull trend. Critical support on IWM is going to be down here right around 187 and 182.5, so stay on the bull as long as we're above those levels and get ready for a short squeeze above 191. On the ARKK ETF, we were down 0.2%, and you can see ARKK also has the full bull trend now, and we do have the bullish breakout above $47 for 3 days in a row, and the bullish breakout above $49 for 3 days in a row. So this is only validating that ARKK is heading to 52 and then 55. You're staying on this bull as long as we're above 47, and you're getting out below 47 because it will look like a false breakout. But so far, this looks like the real deal bull market of higher lows and higher highs, and we now have the full bull trend with the bullish price action to confirm it. On the VIX, we were down 1.4% today as the VIX breaks down to another daily closing low as the VIX is trending down towards 20. And if the VIX closes below 20, that will be another bullish indication, but I do expect the bears to show up at that level. As long as the VIX is below 24, it's just normal volatility and more than likely just a pullback in a bull market that is worth buying. But if the VIX starts spiking back up above about 25 to 26, get a lot more cautious if you see high volume selling. Right now, the VIX is clearly in a bear trend and clearly heading lower, which is bullish for the stock market. On Bitcoin, we're currently up 1.38% as Bitcoin is trying to get back over that 20 simple moving average and form another higher low. So Bitcoin is looking bullish as long as it's forming higher lows and higher highs. And we can start to draw a trend line here where we can see that Bitcoin is starting to walk up with higher lows. And the next bullish breakout will be the break above the daily high at 24,000. And I do expect to see Bitcoin trending up to about 28 to 29,000 on that bullish breakout. You need to get a lot more cautious if we lose support at 21,000 because you're looking for a retest of 19,000 if we break below that support. But so far, we are seeing buyers stepping in on increasing volume down here right around this higher low. Continuing the hot stock segments with the big tech companies that are looking very bullish, and part of the reason why the stock market is going back into a bull trend, we have Amazon stock with the full bull trend and holding above that support level at 138.7 with very critical resistance just above at 144. Above 144, look for a retest of the bear market resistance at 152. And if we lose that support, you're looking for support down here at 134 or the gap close all the way down here right around 123. So do get a lot more cautious in Amazon if it does break down below 134. So your critical risk levels are 138 and 134 with critical resistance at 144 and then 152. On Microsoft stock, we were down 0.26% after Microsoft got that bullish breakout from the resistance trend line and the price target at 283. And you can see we're back to that level after getting a pullback and a retest of the breakout. And we are seeing buyers stepping in at that support. Microsoft is very close to having the full bull trend and very close to getting to the price target at 290. And above 290, we will likely start trending up to close the gap at 296. So everything is still looking bullish in Microsoft with the critical risk level down here at 275. On Nvidia stock, we were down 1.18% after we're starting to cool down just a little bit, but we're still closing above all the moving averages and we're getting very close to that resistance level at 196. And above 196, we will get a short squeeze up to about 213. We're getting close to having the full bull trend, but we could be due for a pullback. So use the critical risk level here right around $180. And the 50 EMA right around 176. And as long as we're above those support levels, you can stay bullish on Nvidia stock. On Tesla stock, we were down 6.63% after we see Tesla pulling back after this very impulsive bull rally, coming right back down to our support zone at 864 and closing right on top of that level. So it does look possible like this could be our higher low if we do bounce off this support. If we don't bounce off 864, then we're looking for 839. And remember, we did break down below our risk level at $900. So that was your sign to get a lot more cautious in Tesla stock. So until we get a positive bounce off of one of these support zones, you will want to be cautious with the next likely bounce off 839 or $800, which is also our 20 simple moving average. Keep in mind, it is possible we bounce off 864, but if you want to be cautious, wait for that confirmation and don't buy blindly, even though it is very likely we will see a higher low forming because we do have the full bull trend. Just be cautious below because we do have a gap to fill and it is possible we do need to go close that gap. So don't get overly bullish and try to catch a falling knife. We do have a gap to fill just above by a few pennies right around 915, so that could be another possible upside price target. On Apple stock, we were down 0.28% as Apple is consolidating below that price target at 166. So the next bull breakout will be above 166 to go close the gap above at 174, and the critical support level to use is right around 163, and if we break below 163 we have support at 160 or the gap close at 157. Stay bullish above 157 because that is still a higher low in this bull trend, and we do have the full bull trend in Apple stock. On the financials, we were up 0.72%, coming up to retest the resistance at the previous daily high as we continue to develop a bull trend. The industrials were up 0.16% with price action above all the moving averages, and we are developing a very strong bull trend as long as we can stay above the 50 EMA. The healthcare sector was down 0.04%, still having the bull trend and still sitting above the 20 sample moving average, so this could just be a pullback before the next bull leg higher. The energy sector was up nearly 2% today, bouncing off of that support at $70, but we are developing a bear trend, so it is still possible that we're trying to go down there and close that gap at $69. So jumping back over to the S&P 500, it does look like the charts are starting to show that we're in the very early stages of starting another bull market, so follow the charts and block out all of the noise. I promise you none of the noise around you is going to matter if the stock market continues to go higher and you continue to see price action breaking out and developing bull trends. You need to learn to separate the economy from the stock market, and right now the stock market is looking bullish, so if you're trading the stock market, you need to follow what the chart is telling you. You can always manage your risk at the critical support levels that I'm giving you, and there is always going to be opportunities to buy the dip. If you feel like you missed this rally, there is always going to be a great buying opportunity right around the corner. So don't get FOMO, make a trade plan, know your risk levels, and then trade accordingly. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.